Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, each and every week when I make a forecast, I draw lines on the chart and I leave those forecast lines on the chart until the following week where I update the report. And I do this because it's evidence of how well the technical signals actually work and how candle charts are used as a forecasting tool. Now this is a 1-year daily candle chart of the Russell 2000 index. It's a broad-based index. Its ticker symbol RUT. And again, as you can see, the lines from last week have been left, and each one of these lines going back a number of weeks here were the lines that I drew forecasting the market. And you can see even going back as far as November, I said the market would rally from that point. The end of the line, by the way, is my target. So we hit the target there. The following week I said the market would drop here, and it did right there on December 1st. It hit that target and then bounced. Right here I said the market would rally and then pull back. It did all that. You can see the accuracy. It's pretty amazing. And last week was when I drew this diagonal line going in that downward direction. Now follow me here, because there's a lot of signals going on in the different markets, and not all of them are working in sync with one another. So this right here was the line that I drew last Friday, saying that the market will most likely pull back. And again, the end of that line is my target price. So what happened is, because we have a shortened trading week this week, on Tuesday the markets opened up. We showed a bearish engulfing pattern. And on the first day of trading in that week, we hit the target. Pretty amazing. And then it started to creep up, but it stayed right around that target price. Now, what does that mean for next week? Well, as you can see here, this is being recorded on the 19th of January. The markets closed today with a bullish engulfing pattern. And that's when we have a long green candle that's engulfing the previous red-bodied candle right there. That is bullish. So for the Dow, I believe that we're going to move up from this point and go higher, and actually have to adjust my charts here. In fact, I'm going to do that by just scrunching the price line right there. So we're going to go up, and I believe we're going to set another record high next week because of what's going on in Washington. Apple's creating new jobs. We have Amazon looking for a relocation of their headquarters in the U.S., which is going to create even more jobs. So this truly is a jobs president like he promised. Whether you like him or not, he's keeping his promises, and it's stimulating the economy. And it's also stimulating investors with this overwhelming sense of optimism where they feel very good about putting their money in the market. Now, I don't want to go over the top with the optimism because I'm still a cautious buyer. I'm very well prepared to get out on any kind of a correction below these moving averages and protect our profits, and more so protect our cash. So this is the forecast for next week in the Russell 2000. Now let me switch gears and go to the VIX. I'm going to show you the VIX first before we go to the S&P because they're inversely related. Now again, last week I put out a 2-week forecast for the VIX stating that we would most likely rally to the $12.50 level. Now again, the end of that line is my price target. I started this 2 weeks ago, and you can see that we hit that target right here on the 17th and then started to pull back. So now that we hit the target, I'm going to erase this line and explain to you what I'm seeing on the VIX. Remember, volatility index is inversely related to the S&P. This here is a bearish engulfing pattern, just the opposite of what we saw in the Russell 2000. So this bearish engulfing pattern is not just engulfing the previous day, but it's engulfing the previous 2 days. So this is very bearish for the VIX. And again, if the VIX is expected to go lower, we're expected to go higher in the S&P. So I think the VIX is going to pull back to fill this gap right there. That's going to be my price target for the VIX. The gaps on the chart for the VIX fill 100% of the time. It may or may not do that next week, although I think it will, but eventually, most definitely, I believe it will. If the VIX pulls back to the $10 level right here, we're expecting a bounce after the gap fills, and then we're expecting the S&P to do just the opposite. So again, follow me. I said that the VIX will most likely pull back and then bounce. So I think what will happen is the S&P will rally and then pull back, just the opposite. So here we go with the S&P. Ticker symbol SPY. I said that we would most likely go up a little bit. This is, again, my 2-week forecast here said that we're expected to go up early on, which it did, and then pull back. This is a 2-week forecast, so I'm going to erase this right here and adjust because of what we saw on the VIX. I have to scrunch my lines again right there. I think that the S&P will go a little bit higher, and then I think we're going to pull back just like that on the S&P. So I don't want to confuse you here because there's a lot of signals. The purpose of my doing these videos is to educate the public on technical signals and how to read candle charts so that you could also use them as a tool for forecasting in your own account. Now let's take a look at the Qs. That's the NASDAQ market, and then I'm going to wrap up with the Dow. So again, this is my forecast 2-week line was that we would rally in the Qs and then pull back. I'm going to leave this exactly in place like this because we have a small little doji up here which usually signals a pivot point. So I do think that the Qs are going to pull back a little bit, even though the Russell 2000 could go higher and the S&P could go a little bit higher. The Qs, being more small cap stocks, could actually come back a little bit before we go higher, and that's going to stay in place right there. Now, let's go to the diamonds. What I'm going to do here is I'm going to switch to a weekly chart so you can get the full effect of what I'm talking about. And I'm going to erase all of these lines and redraw for you the fan lines that I'm talking about and have talked about for many, many weeks. This is now a monthly chart. Look at this, folks. If you're drawing fan lines, a fan line is basically an indication of an accelerated trend. So to start the process of building fan lines, you go with the most recent low on the chart, and that's right there. You start your line at that low and you project out until you can connect with a couple of other lows along the way and then extend out. That's fan line number 1. Then what you do is you take the second point in the first fan line, which is right there, and you start your second fan line, again accelerating that trend in a more vertical direction, connecting to the second point there, and then you project out again. And you follow the sequence where you go to second point on fan line number 2 and you go out. So there we have 3 fan lines, but what I'm going to do is now zoom in a little bit to the daily chart so you can see how this is working out. Now you go here, connect that point to this point, project out. That's another fan line. Go here, connect and project out right there. And then once again, you can go from this point and go to the most vertical level right there. Now what does that tell us? Again, backing up just a little bit so you can get the full effect of this. We have 1, 2, 3, 4, 5, 6 fan lines. Now, I did this months ago with the Bitcoin market to project the pullback in the Bitcoin price, and I'm going to do it again here with the Dow. Never before in my 35 years of trading the markets have I seen 6 fan lines unbroken in the Dow Jones Industrial Average. Now, this should be for you a flag, a yellow flag of caution, so that if you are taking any new long positions, you are most definitely protecting those with either stops or options or selling out periodically to take profits to raise cash. Because if this first fan line, let me show you the rules of fans. If the 6th fan line breaks, which I think it will, and I'm going to do this right there, I think next week we're going to see a break in that fan line. It generally pulls back to the next fan line in the sequence. So if it breaks 6, it will most likely go to fan line number 5. And again, this is a mirror image of what happened in the Bitcoin market because it got overextended to the top. Let me show you the chart in the Bitcoin market right here. Again, this is a weekly chart. And the Bitcoin market was a little bit different because it had 9 fan lines that were drawn, and we got to the point where it was almost vertical. We had a bearish engulfing pattern, and it was when I was instructing the general public on fan lines that I displayed how once a fan line is broken, it generally goes to the next fan line in the sequence, and it did here. Well, then Bitcoin 2 weeks later broke the next fan line in the sequence, and my price forecast was that it would drop to the next fan line in the sequence, which is right here. Well, this week Bitcoin hit the target price right to the penny, exactly to the penny. Now, for the Bitcoin market, if you're trading Bitcoin, I don't have a position in Bitcoin. I'm very unemotional about it, but technically you could see a little bit of a bounce on that before it pulls back. Ultimately, my price target for June is around $700 to $800, which is much lower than where it is right now. Okay, so that's how fan lines work. Again, going to the Dow, if we break down below that fan line right there, I could even go back to the daily chart to show you this. If it goes back to the fan line, it will most likely bounce before dropping below the 5th fan line in that sequence, and then we could see lower. So right now, again, all the signals are pointing towards a cautious long or a defensive position to protect your account and to protect your money. That's the whole point of why we do this at the Market Guys. Now, if you'd like to learn more about what we do, just go to the Market Guys website, and this coming Monday, the 22nd, I'm having an open house Q&A. It's open to the public. Scroll down just a little bit on the site, click on that link right there, and it'll bring you to the registration page where you can save your seat for this event on Monday. It's 1 hour, it's free, you can ask questions, I'll answer them, I'll analyze your stocks, and it's a lot of fun. Then, on the 25th, which again is next week, if you go to TradeStation, TradeStation is hosting a web seminar on Bitcoins, and I'm going to be doing a presentation on how to manage risk in the cryptocurrency market. All you have to do is click on the menu page right there, go to University, and then it's going to be right on this page. You scroll down just a little bit, and you'll see my face right there. You click on Register Now, and it brings you to the registration link, which is, again, another free 1 hour session. So we have a lot of education coming out at you. We have a lot of information that will help you manage not just the risk, but to manage your profits as well as you follow the technical signals. So I'm looking forward to speaking with you on Monday and or on Thursday the 25th. And hopefully you'll have questions ready for me and your computer ready to go. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.